Michael Robinson, tech analyst, and Greg Halter, director of research at Carnegie Investment Counsel. Greg, I'll start with you. Some of your thoughts on the quarter, and where do you think Marvell really is heading?
Sure. Thank you for having me. Their data center business was up 87%, and that really carried the other four sectors that were all down anywhere from 60% to even 75%. The enterprise networking and carrier businesses are supposed to be troughing, improving later this year, which would be a decent boost for them. And it does remind us that the semiconductor industry is volatile and cyclical.
Yeah, it's all about AI, data center. Michael, what did you think about the quarter, and what do you think may drive Marvell going forward?
Well, I think it's a great. Last time we talked, Nicole, we were talking about the AI ecosystem being global, and so the data center revenues are important, but also they've been expecting a run rate of $800 million a year in sales related to AI. They've optimized their AI chips. You have to do that for the networking world. So I think they're a great play. They're a serial acquirer. One of the things, two things are going on in terms of the stock performance today. Part of it is Dell's getting slaughtered, and so I think there's been a panic overreaction throughout the whole sector related to chips. Also, you have, we've talked about this before, NVIDIA's blowout earnings has set a very high bar. So I think if you disappoint even slightly in this market, it was a mixed result. One of the things that I think is healthy for this company, which I do like for the long haul, is they seem to have made a decision that they're going to make sure that their profits remain strong, not across every sector. They can't control that in terms of the sales. It's dependent upon demand, but earnings were off 23%, and I think that the sales decline is a little smaller. I think that they're really going to work on keeping their margins as high as they could. Which, in the long run, that's healthy. That's what you want. You want management looking at margins.
Yeah, I mean, you do love Marvell for the long haul, the long term,
Yes.
as you said. And you know, we see the results of Dell, MongoDB, and others. I mean, where do you put it in the landscape here, Greg?
Interesting you should say that, because we also look at other companies that are not specifically tech companies, but companies like Vertiv and nVent and Eaton, which have a play on the power side into the data centers, and their stocks are all going down as well today. So there is that carryover effect that was mentioned earlier. Relative to where to put it, you know, these stocks have had some tremendous moves over the last year and certainly into this year. So having corrections along the way is certainly not to be unexpected, just given some of the tremendous moves they've had so far. Nothing goes to the moon.
Right, understood. Where do you think, I mean, we talk about the different names in the group, and yeah, there is a little overhang. You know, the NASDAQ hit new highs. And we're seeing stocks moving 25% up, 25% down. We're in the middle of earnings season, so a lot of swings here. But what other names are you watching, Michael?
Well, you know, I was we've talked about this AMD in the past, and I really like the way the technicals are setting up on that. It looks like it's got a volatility breakout in the making, probably to the upside. It's possible to the downside. That's a company to own for the long haul, as well as Marvell. But AMD is a great AI play. They've got a lot of really terrific products. The CEO is really first rate. That company is really doing very well across the board right now. But no one can beat NVIDIA's earnings. So I think that's part of what's going on here. I keep hammering away at that, because you know the average company out there is not going to continue to have 450% increases in earnings on a quarterly basis, and NVIDIA won't either. At some point, it'll slow down. But I do like AMD as a good number two in a lot of the markets where they compete with NVIDIA, and they've got overall pretty strong margins. And they are thinking ahead about how to be in the faster, better chips in the data center and other places like that, AI optimized. So that's another company to really own for the long haul.
Yeah, I thought it was interesting earlier when Dan Ives was talking about the race to 4 trillion, and which name would be there. Of course, NVIDIA today at 1,086, and so we'll watch the market caps of some of these names. Final thoughts here, Greg, on some of the winners or names that you're watching closely.
We continue to like Applied Materials. They are providing the tools into the semi space. It's kind of a hidden gem, we think. Excellent balance sheet, tremendous cash flows, raising the dividend by 25% plus, buying back half their stock over the last 10, 15 years. So that's one we like. We would also continue to be buyers of Ansys, which is in the throes of being acquired by Synopsys. And they are in the design area for semiconductor chips. And we think that's a good place to be. None of these chips can be created without their tools.
Great to see you both. Thank you so much. And we'll have another busy week ahead next week. Michael Robinson, Greg Halter, thank you for being here on this Friday.